All right, let's jump right in and break down the latest quarterly numbers from the copper giant Freeport McMoRan. Now, at first glance, it looks like they delivered a massive earnings surprise. But, and this is a big but, once you start digging into the numbers, the real story is, well, it's a lot more complicated than that. So let's get into it. First up, the headline number that really turned some heads. We're talking about an adjusted earnings per share of 47 cents for the fourth quarter of 2025. Now, to put that in perspective, the market was only expecting something around 26 cents per share. So yeah, 47 cents, that's a huge beat, no doubt about it. But here's the kicker. The most important part of the story is actually what this headline number doesn't tell you. And to really get what's going on, we have to rewind a bit, back to the previous quarter, because that's when a major challenge hit the company. You see, a tragic mud rush incident happened at their absolutely enormous Grasberg mine in Indonesia. This was back in September 2025, and it basically slammed the brakes on their operations there. The impact on production was just profound. And you can see just how stark that impact was right here. Look at these numbers. Copper production from Grasberg, it fell off a cliff, down 84%. Gold, down 77%. All of this meant their core profitability, what we call adjusted EBITDA, took a 28% hit compared to the quarter before. So you're probably thinking, wait a minute, if production was down that much, how on earth did they beat earnings expectations? Well, the secret ingredient, believe it or not, wasn't copper. It was gold. Yeah, I know, it sounds kind of weird, right? How does gold help? Well, it turns out that when they're mining for copper, they also pull up a lot of gold. And this gold plays a huge part in their financial strategy, especially in how they account for their costs. It all comes down to something called byproduct credits. Think of it as a bit of accounting magic. It's a really smart way to make the most out of everything you dig out of the ground. Okay, so here's the play-by-play. Step 1, they mine the ore. It's got copper, but it's also got gold mixed in. Step 2, they sell that gold on the open market. And here's the clever part. Step 3, they take all the money they made from selling the gold and subtract it from the cost of producing the copper. So on paper, it makes the copper look way cheaper to mine. And this is where it gets really interesting. With gold prices near all-time highs, like they are right now, this strategy is supercharged. It becomes incredibly powerful. And here's why that matters. These gold credits can actually hide what's really going on. The company's bottom line can look fantastic, all thanks to gold, even while their main business, mining copper, is hitting some serious roadblocks. Okay, so let's zoom out for a second. Let's talk about the big picture. Because all of this is happening against a backdrop of some massive global trends that are cranking up the demand for copper like never before. There was a recent study from S&P Global that really put a spotlight on this. It talked about just how critical copper is becoming in our new world of AI and total electrification. And what's driving this? I mean, take your pick. You've got the insane growth of AI and the data centers needed to power it. You've got the global shift to green energy. Think wind turbines, solar panels. You've got electric vehicles and all the charging stations they need. And on top of all that, we just need to update our old creaky power grids. It's a perfect storm for copper demand. And get this. The report projects that all this electrification is going to push copper demand up by a staggering 50% just by the year 2040. That's a lot of copper. And that's exactly why you hear people call copper the metal of electrification. It makes perfect sense, right? More than 65% of it is used in things that move electricity around. We're talking about everything from the wires inside your house to the massive infrastructure that powers our entire modern world. So that brings us to the big question. We have this huge surging demand on one side, and on the other, we have Freeport McMoRan dealing with that major setback at Grasberg. So what's their plan? How are they going to meet this moment? Well, they've laid out a pretty clear roadmap for 2026. The first part of the year is going to be slow as they continue the recovery work. But then, in the second quarter, they're planning to start firing the Grasberg mine back up in phases. The real action, though, is going to be in the second half of the year. That's when they expect to make the vast majority of their copper and gold sales. We're talking 60% of their copper and a whopping 75% of their gold. And they're not just focused on getting Grasberg back online. They're also playing the long game. They're pushing ahead with some huge growth projects all across the Americas, ramping up production at some mines, trying to double it at another, and even developing brand new projects. They're clearly looking to beef up their supply for the future. And the company's CEO, Kathleen Quirk, sounds pretty confident. She basically said they're laser-focused on getting things done, executing their recovery plan while at the same time laying the groundwork for more growth down the road. So, when you boil it all down, it's really a story of resilience. You've got a company navigating a pretty serious short-term crisis, but it's also perfectly positioned for this massive long-term electrification trend. Which really leaves us with a million-dollar question. As the world goes electric at a crazy pace, can one of its biggest copper producers pull off this comeback and actually power our future?